Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is March the 15th, and tonight is story time with Mr. Oxy. It is approximately 9 p.m., so it's almost bedtime for all of you guys who live on the dark side with me as energy investors. And I thought what we're going to do is spend a little bit of time talking about stories that I told before, which I am going to revisit, and probably for many of you, it's going to be for the first time. But before I do that, let's just quickly take a look here at the news headlines. So Josh Owens writes here in oilprice.com why oil crashed below $100, and he has a whole variety of different reasons as to why the oil price is dropping. Interesting little table here. This is the sort of graphic of Russian imports by the European Union right now, and this is how they can avert that. So about half of that they can replace with other stuff. So this little white block over here says other pipe gas and LNG, and gray areas coal. This skinny little blue line here, which is still going to be skinny for a long time, is new renewables, nuclear and biomass. I don't know why they lump those two together, because nuclear is energy from uranium, and biomass is basically just burning trees. And then heat pumps, energy efficiency, and turning down the thermostat. So those are some of the plans that they have anyway. Josh writes a couple of different reasons why the oil price has crashed. I'm not too worried about this, because in the greater context of supply and demand, the picture hasn't changed much at all. Many people on the channel have been talking about US sanctions, and this particular headline here by Simon, also in oilprice.com, says US sanctions can't keep China from buying Russian oil. Of course they cannot. I mean, China can buy whatever they want. In fact, just today, Saudi Arabia said that they would consider Chinese yuan as payment for some of their oil. So a lot of people have commented on the channel, many of the comments that I haven't had a chance to get back to, but that's not really what I want to talk to you about today. I actually want to talk about a couple of different things. Some while ago, it was in 2012, I wrote this book, Mergers and Acquisitions, and the title of the book, As a Corporate Strategy for Delivering Shareholder Value. That's the critical piece, right? As a corporate strategy for delivering shareholder value. Why do people actually acquire? So many people have asked me, is Warren Buffett planning to acquire Oxy, and what's he wants to do? What is it that he wants to do? And how does this deliver shareholder value? What happens to us in the context of what Uncle Warren is doing? So don't worry, I'm not going to read my book, but I do want to take you over here to summary. The summary says by this guy, Rudy. Upon review of the summary case studies and examples discussed above, we observe different stated and underlying reasons for adopting an M&A management strategy. In the instance of UPS, that's United Parcel Service, acquiring TNT, many of you will be too young to remember TNT, but the same way we have, DHL, UPS, FedEx today, a few years ago, now probably about 10, 12, 15 years ago, there was another company called TNT. They were acquired by United Parcel Service, which is UPS. The acquirer, UPS, clearly wanted to extend its global logistics capabilities and found an acquisition target that seemed to be a good fit at an attractive price. Why did they buy? Because they needed to spread their wings, and the best way that they could do that was to grow their business through acquisition. The market often reacts instantly to the news of M&A activity. We saw that recently in the case of Warren Buffett buying a big chunk of Occidental shares, and the expected subsequent impact that the news will have on stock prices of the parties. We saw that too, right? Occidental spiked and now it's pulled back a little bit. Very few investors would be willing to wait a few decades. Would you? Wait a few decades for a reasonable return? In the case of Sasol, which is a South African energy giant, they acquired Talisman Energy a few years ago. Sasol seemed to be in possession of a great deal of cash and was looking for a suitable acquisition target. Why did they acquire? They just had too much cash. Warren Buffett also has too much cash. And if you can pick up something at a good price, you could probably just go for it. So Sasol's strategy seemed to imply that it was a good time to acquire because the target corporations for acquisition were cheap. In other words, the stock was trading at a low price and corporations were undervalued, which is the case of Oxy too, right? So why did Warren Buffett buy Oxy? Well, maybe because Oxy is cheap. Facebook acquired Instagram at an incredible multiple, paid about $1 billion for Instagram at a time when $1 billion was still seemingly viewed as a lot of money. Why did they do that? To mitigate competitive risk and perhaps to avoid a more competitive business environment in the future. They didn't really need to buy Instagram, but they needed to buy Instagram in order for Instagram not to overtake Facebook as a primary go-to site, especially for the younger generation. In fact, most of them have left Facebook, but they are using Instagram, which means they're still using Facebook. CNN, a while back, looked to acquire Mashable. CNN is the most unlikely company on the planet to make any acquisitions. Their parent company, Time Warner, actually makes acquisitions from time to time, but CNN not so much. According to the media report, CNN's focus on Mashable seemed to be entirely geared towards rejuvenating CNN's relatively tired media brand. Right? So why do people acquire? I'm giving you a few different examples. One more. Manulife acquired John Hancock. So Manulife is a Canadian financial services firm, and they acquired John Hancock in the United States. Why? They're entry into a much larger and therefore presumably financial lucrative US market. So this is a Canadian company buying a US company. Assuming things went well, seemed to be exactly that, a strategy geared to entering a new market at the right time at a fair price for the acquisition without retiring a staple US branded corporate entity. So the reason why I'm sharing this with you is not because I actually want you to go on Amazon and buy the book. In fact, it's very boring. It's a case study, so not really worth reading. How about this one? So I wrote another one called Walking on Water by the same guy, Rudy Bester. But I wanted to share with you here a little story. Walking on Water is actually a story about me. But there is a section inside of this book here where I basically say chapter 5, financial literacy, and I explain a couple of things that are potentially interesting to you because some people have talked about sanctions and the entire world seemingly, imposing sanctions on Russia is meant to put Russia into dire straits, but that's not necessarily how it works. So from this book, not related to Russia and the Ukraine at all, but just in general, right? People who rely on the mainstream media for their world education are fabulously uninformed. By the way, I'm reading from my own book, which is like probably more boring than my usual videos. They would not know this because it is exceedingly difficult for anyone to know what they do not know. So while the US government and its propaganda division, a few owners of the cable and printed news networks, all touted the success of America's sanctions against South Africa. For those of you who know, or for those of you who don't know, that's where I was born and raised, in South Africa. And America imposed sanctions against South Africa quite justifiably because of South Africa's apartheid policies at the time. But the politicians were kind of patting themselves on the back for their successful sanctions campaign, while people in South Africa just went about their business as before, albeit executed a little differently. So I write a chapter here on how does sanctions busting work, right? So I share this with you because it's firsthand knowledge, because in addition to the fact that it's me, at that moment in time, I was actually working for initially and then later with my brother. My brother effectively busted sanctions by becoming Kodak South Africa when Kodak South Africa disintegrated, went away. It's not a long chapter. It's just a couple of pages. I basically just write a little summary of how my brother went about becoming Mr. Kodak South Africa, while, as I said, the politicians were patting themselves on the back at their successful campaign that prevented US companies from doing business in South Africa. I end that little chapter by saying, by way of a real example, Delta Motor Corporation. There's a really good chance that none of you have ever heard of the Delta Motor Corporation. Delta was a South African motor car manufacturer. Where did Delta Corporation come from? So Delta was not like Tesla, where a genius like Elon Musk went and purchased a defunct motor car factory and turned it into a phenomenally successful international brand. No. Delta, on the other hand, was created through a management buyout after General Motors divested from South Africa. Now, I was just talking about sanctions from the point of view that the American government basically imposed sanctions against South Africa, and all the major US brands had to withdraw from South Africa and stop doing business in South Africa. Sound familiar? It's kind of like the current sanctions that are imposed against Russia, and companies like Exxon withdraw from Russia, as an example. The Delta Motor Corporation was created through a management buyout after General Motors divested from South Africa in 1986. That's probably before some of you were born. It was then headed by a former General Motors executive who was actually transferred there from Detroit to South Africa to run this completely hands-off, not affiliated, not associated company, which had nothing to do with General Motors, not even at arm's length, called Delta Motor Corporation. The chief of the company, Delta Motor Corporation, was Bob Price, who was transferred to South Africa from Detroit by General Motors. So I'm not implying that sanctions have no effect whatsoever. In fact, I think there's a really good chance in the near term that Russia is experiencing a world of hurt. And at the same time, it's not my intention to make light of the situation in Russia and the Ukraine. Whatever the facts are, whatever is happening on the ground there is unnecessary in my view, and very sad. In fact, if there's one thing that we as people on this planet should strive to avoid at all costs, it's war. It serves no purpose. No one is a winner. And so I don't want to glorify that situation at all. All I'm trying to do is give you some context to a couple of things, right? So the first one was mergers and acquisitions. Does Warren Buffett actually want to buy Occidental? And if so, why? And what's the net effect of that for us as shareholders? And the other one, just a little brief summary from my other book that effectively talks about sanctions and sanctions busting, which is an interesting story. This book, by the way, is a story. It's actually my story. It's a story about my life. And I'm going to end it here with just a quick reference, because my story in this book consists of 3 parts. The first part 1, Poor, Homeless and Hungry, a Survival Guide. Then the second part is all about some sort of financial tips and management, and some of the things I share with you on a regular basis on this channel anyway, when we're talking about stocks and how we can trade these stocks and how we can take some profit and all that kind of good stuff, right? So some of the things I discuss in here. So part 2, tips from the investment trenches. And then the last part of the book, so it's in 3 parts, right? So the first part is kind of my story. And then the last part of the book, which begins on chapter 26, A Millionaire's Trip Down Frugality Highway. How to be frugal, you know. Interesting comment here. I'm going to close with this. I just want to show you something here for a second. So let me just go back to the channel for a minute, because I wanted to share this with you. Ronald Lamour made a comment here, and he shared a quote that probably many of you have heard before. Bulls make money in the market, bears make money in the market, pigs get slaughtered. Don't be foolish with your money that you worked hard to get. You know, that is good comment, man. You know, if I share with you guys that I've, you know, exited a little bit of my, you know, Oxy stock, or sold my most expensive shares to lower my cost basis, took a little bit of profit off the table, I'm just being honest and transparent with you. And I'm just telling you as it is. How you manage your money is entirely up to you. But there are people, and I hope, including myself, that are here to help you. You know, I'm not here to make money out of doing this. I do this because I enjoy it. So if anything, I do it for my pleasure. And I'll leave you with this quote from this weird, strange dude on YouTube called Rudy Bester, who says, "When I was young, I was very poor. After a lifetime of hard work and commitment, I am no longer young." So guys, on that note, this is Mr. Oxy saying thanks for watching. Take care. And by the way, don't buy those books. They're super boring. Find something else to do that's fun. And I'll talk to you soon. Thanks for watching. Bye.